In today's short video, let's have a quick review over the 10 best value stocks to buy and watch in third quarter 2021. We're also gonna have some key takeaways regarding what are value stocks, how to find value stocks, and some value stocks for beginners. What's going on, guys? This is Barro, aka Investmentor. Thanks for your time and watching, and I hope you don't mind to hit the like and subscribe button down below this video. Before everything, your click to support always means a lot to me and this channel. Wall Street has taken investors on a lucrative ride for the better part of the year. Since the market crashed in March 2020, as a result of the COVID-19 outbreak, US stocks have been consistently going upward. Some pullbacks have threatened to end what is turning out to be a great year for investors along the way, but never amounted to anything more than just a slight correction. When all is said and done, the S&P 500 has increased over 25% in 1 year. However, it's worth nothing that today's unique market conditions have created inherent value in several quality equities. Despite a frothy marketplace, there's still plenty of rooms for today's value investors to go shopping. Here's a quick look at some of the best value stocks and why investors may want to consider adding them to their own portfolio. First of all, let's see what are value stocks. The concept of undervalued stocks will change from one to another. The metric used to value equity themselves are weighted differently by the entire investment community. While some investors emphasize price to earning ratios, others choose to look at the market cap, total addressable market, and anything else that may be used to help value a company more precisely. When all is said and done, there are just too many variables and too many metrics to value companies objectively. Therefore, the definition of a value stock would really depend on who you ask. Regardless of who you ask, however, most investors will relate the best value stock to cheap valuation. As their name suggests, value stocks are widely considered to be relatively cheap to their earning and long-term growth potential. In addition to their relative affordability, value stocks typically share some or all of the following characteristics. More often, value stocks are established, mature business or company. Most value stocks will boast steady growth rates, but not fast enough to be confused with growth stocks. Also, value stocks have become synonymous with stable revenues and earning reports. In other words, value stocks are companies that have demonstrated they can provide shareholders with long-term growth that exceeds the limits set by their current valuations. And then, let's learn how to find value stocks. To find value stocks, investors must first know what to look for. It isn't enough to look for stocks that are cheaper today than they were in the past. That's not how value stocks work. Instead, investors need to look at the underlying fundamental factors relative to the company's perspective, also along with other indicators. Not surprisingly, there are many things investors need to look in to find value stocks. The question is, what metrics will help investors find value stocks? Investors need to consider several important metrics when finding the top value stocks. But there are three keys which demand a little more attention than the rest of the pack. First is the PE ratio, also known as the price multiple or earning multiple. The PE ratio stands for price to earning ratio, is a metric used to value a company based on its current share price relative to its earning per share. Typically, as the most common and most popular valuation tool, the PE ratio is best used to compare companies within a similar industry. To calculate the PE ratio, we divide a company's stock price by its earnings last year. To be clear, there's no objectively good PE ratio, but 15 to 20 is usually the differentiator between value stocks and the expensive stocks. Those below 15 are usually considered cheap. while those above 20 are either fair value or expensive. Second is the PEG ratio, stands for price to earning to growth ratio. The PEG ratio isn't all that different from the previously discussed PE ratio. While the PEG ratio helps prospective investors identify a value, it also adjusts to account for different growth rates. To calculate the PEG ratio, we divide the PE ratio by the company's annualized earning growth rate. Anything lower than 1 typically suggests the stock is cheap. And third is the price to book ratio, PB ratio. Many investors have been used to value companies based on their book value. Many investors have been used to value companies based on their book value or the company's total net asset. However, investors may use the stock's respective share price as a multiple of its book value to identify cheap buying opportunity. Stocks trading for less than their book value may represent buying opportunities out there. It should be noted that all of these metrics aren't the only things investors should use to find value stocks, but are instead used in addition to other tools. If these metrics aren't guaranteed to identify undervalued stocks, nor do they work for every company or even the growth stage the company is in. For example, some companies may not even have earnings, which would make this metric useless. Therefore, it's better to look at these metrics as a complement to a larger valuation strategy. Here are the 10 best value stocks to buy and watch for you in 2021. Ford Motor Company with the ticker F, General Motor Company with the ticker GM, APVIA with the ticker ABBV, Dick's Sporting Goods with the ticker DKS, Zillow Group with the ticker Z, Ally Financial with the ticker ALLY, Skyworks Solution with the ticker SWKS, Adobe with the ticker ADBE, Ulta Beauty with the ticker ULTA, Viacom CBS with the ticker VIAC. Besides, let's take a look into 3 best value stocks for beginner investors. The first one, Berkshire Hathaway with the ticker BRK-B, the B share. Second, Bristol Myers Squibb Company with the ticker BMY. Third, Morgan Stanley with the ticker MS. Berkshire Hathaway Incorporation is typically better for new investors to build their portfolio on solid foundation, and no foundation is stronger than starting a position in Berkshire Hathaway. The products of Warren Buffett himself, Berkshire Hathaway, has become synonymous with Wall Street's greatest stocks. The company represents a unique convergence of more than 60 wholly owned businesses and more than 4 different positions in some of today's greatest equities. Buffett himself is a value investor and rarely strays from his ideology, which means an investment in Berkshire Hathaway represents an investment in value. And the second, Bristol Myers Squibb is a biopharmaceutical company specializing in 3 particular healthcare sectors: oncology, immunology, and cardiovascular therapeutics. BMY has become one of the most credible names in the industry, which could use more of them. Despite being one of the biggest players in the healthcare industry, the stock actually ended 2020 down from where it started. At a time when the entire market shut off, BMY remained relatively stagnant. That said, BMY has many tailwinds expected to work in the company's favor moving forward. The 2019 acquisition of Celgene and other promising drugs should help BMY grow from today's cheap valuation. On top of that, BMY has a relatively low PB ratio and price to sale ratio, making the stock look more attractive than alternatives in the same industry. And the third one, Morgan Stanley. The entire financial sector lagged in every major market index, and Morgan Stanley was no exception to the rule. Over the course of 2020 and 2021, Morgan Stanley underperformed the broader market because of the low interest rate. Nevertheless, the company's recent performance wasn't due to its own shortcomings, but rather the lasting impact of the coronavirus. Morgan Stanley is still one of the best names in the financial sector right now, and its recent performance makes it a good value, especially with the economy about to open back up again. Additionally, Morgan Stanley's PE ratio and PS ratio suggest that the company is undervalued compared to its peers. In summary, the market has experienced every end of the spectrum in 1 year. Last year, the market experienced one of the most dramatic downturns in history with COVID-19 was officially declared a pandemic. However, the market always drops faster than it rises, and rises more than it drops. At least that's what history tells us. Since the crash, the market has done nothing but rebound, last a few corrections here and there. In that time, investors were introduced to some of the best value stocks the market has ever seen. In a matter of weeks, the market gave out some of the best discounts anyone could ask for. Those fortunate enough to be able to find the top value stocks have been reaping the rewards so far. Those mentioned in this short video today have already paid off well, but identifying the best value stock moving forward well will definitely help new investors establish lucrative positions in the futures. Please feel free to leave any of your thoughts and comments, and never forget to hit the like and subscribe button down below this video, and I look forward to sharing more with you in the next one. See you.